5 ships crossed the Strait of Hormuz on April 9. Iran had promised a minimum of 15. That gap, 10 vessels short on day one of the ceasefire, barely registered in the headlines. The S&P 500 extended its winning streak. The Nasdaq climbed. Oil futures fell, as traders priced in an open waterway. The market read the US-Iran-Israel ceasefire as a solved equation. It was not. The relief trade has logic behind it. On April 9, the New York Times confirmed that the US, Iran, and Israel agreed to a formal ceasefire. Bloomberg reported oil opened higher on ceasefire hopes before retreating as peace negotiations began. Stocks making the biggest moves midday included Meta Platforms, Amazon, and Marvell, none of them energy names. The rotation away from defensives was swift. Mortgage rates fell to 6.37%, down from 6.46% the prior week, a Freddie Mac survey showed, with analysts directly crediting the ceasefire. By early afternoon, the market had repriced geopolitical risk lower, by roughly the full width of the conflict premium built up since fighting began. The public take is clean. War ends, oil flows, growth resumes. That is what futures contracts and equity positioning reflected by Thursday's close. S&P Global Market Intelligence tracked Hormuz traffic on April 9. 3 tankers and 2 other vessels crossed. Iran's pledge during the ceasefire window was a minimum of 15 ships. The shortfall is not noise. It is a direct test of whether the agreement functions. And on day one, it did not. The discrepancy matters for a specific reason. The ceasefire rally was priced as if Hormuz had already reopened operationally. It has not. An airline industry trade group warned Thursday that jet fuel supply disruptions from the strait closure are comparable in severity to post-9/11 shortfalls and could take months to replenish, even if the strait fully reopens now. Oil markets, which are closer to the physical supply chain than equity desks, reflected this hesitation. Bloomberg noted crude was more skeptical of Trump's peace signals, while stocks ran higher. Layered on top, the IMF warned Thursday that the Iran war will drag global growth lower regardless of the ceasefire's outcome. Q4 US GDP was revised down to 0.5% annualized growth. The Commerce Department confirmed the weakest quarter since early 2022. The Fed's preferred inflation gauge, PCE, came in at 2.8% year-over-year for February, still well above the 2% target. Federal Reserve Bank of Cleveland President Beth Hammack said publicly Thursday that a rate hike remains possible if inflation stays elevated. The equity market celebrated a ceasefire. The bond market and the physical oil market did not celebrate the same thing. The misread is this: a political announcement was treated as a supply chain resolution. These are different events on different timelines. If the 15-ship threshold is not met consistently over the next several days, the ceasefire's practical impact on energy supply remains limited. In that scenario, the rally that extended the S&P 500 and Nasdaq winning streaks on April 9 is built on a premise that has not yet materialized in shipping data. The weight of evidence leans cautious, but with a narrow path to validation. The bull case holds if Hormuz traffic accelerates sharply in the next 48 to 72 hours. If daily crossings reach and sustain the 15-ship floor Iran pledged, the supply chain assumption embedded in Thursday's rally gets confirmed, and the repricing of geopolitical risk holds. Amazon's CEO Andy Jassy detailed $25 billion in AWS data center investment in Mississippi and a ground-up AI rebuild of the retail experience, sending Amazon stock up over 5%. Meta's Muse Spark model launch drew Wall Street upgrades from Piper Sandler and Citizens analysts. CoreWeave locked in a $21 billion cloud deal with Meta through 2032. The underlying AI infrastructure demand that drove Thursday's tech surge does not depend on Hormuz. That bid remains intact. The bear case activates if shipping traffic stays near 5 vessels per day through the weekend. Jet fuel inventories are already drawn down. Airlines have warned of month-long replenishment timelines. The IMF's growth downgrade and the 0.5% Q4 GDP revision mean there is no macro buffer. A ceasefire that does not reopen Hormuz is a ceasefire that does not change the supply shock, and a rally priced on a solved equation that is still open. The one number to watch tomorrow: S&P Global's daily Hormuz vessel count. If it does not approach 15 by Friday, the signal the market priced on April 9 was not the signal it thought it was.